What's up, guys? T from Focus Trades. I'm going to talk to you guys about a couple of swing trade setups. So, hope everybody's having a good Memorial Day weekend. And Focus Trades members, I just uploaded the updated swing trade focus list to the site, so you guys can check that out this weekend for, the long, in-depth video. But for those of you guys who subscribe here on YouTube, a couple of swing setups I'm looking at the moment. So, first one here, guys, is Beyond Meat. And, you got this nice move to the upside here. Not only into earnings, but after earnings as well. And now you got a squeeze taking place on the 4-hour chart. So with a setup like this, the question is, we see the 4-hour squeeze, so we know we're consolidating, we know we're building up energy. Which direction is that energy going to be released? Now, one thing that makes Beyond Meat a bit interesting is you got a decent amount of short interest. So though it's a little bit, further away from the 21 EMA down there at 120, then I typically would like to see it's a nice consolidation. And again, you do have a little bit of short interest. So to say Beyond Meat, guys, couldn't continue to run further, right? I think it could. What we discussed in the long video is you want to be careful for a move down, to that 21 EMA. So if you're going to swing trade this thing, guys, I would, swing trade it in a fashion where your position can not only survive, but still leave you with a profit in the event that we don't immediately break out of that 4-hour squeeze to the upside and instead see that reversion to the mean down towards 121, 120. And of course, you could do that with a put credit spread, selling puts underneath the moving average. But that's what I'm looking at there, guys, for Beyond Meat. Looking for the 4-hour squeeze to potentially continue towards the upside here. But I'm going to structure the trade in the group in a fashion where we can still make some premium, even if we do roll back towards that 21 EMA first. So that's Beyond Meat. And now we got NVIDIA here, guys. So NVIDIA, big move into earnings. And, like Amazon, like Netflix, earnings comes out, guys, and it goes nowhere. So we actually did a pretty good, cool trade in the group. We did a live stream before the close there on Thursday. And we did an iron condor in NVIDIA into the earnings announcement. Basically placing a bet, guys, that NVIDIA was going to make less than its expected move after the earnings announcement. Expected move was about $20 up and down. It pretty much opened up flat. So we did an iron condor shorting the at-the-money options that are juiced up in premium before the earnings announcement. Market opens up the next day. Just like many leading names this year, we go nowhere after earnings. The premiums get crushed, and we collect all that premium. So that was a pretty fun trade on NVIDIA, and that was over 100% return. Basically placing a bet, guys, that a stock is not going to make a bigger than expected move. So I'll definitely do some videos about that setup and strategy in the future. But for this week, NVIDIA gets a gap up here, holds up decently after earnings, and you're simply looking for continuation here, guys. So to kind of define continuation, we've clearly got momentum behind NVIDIA, which you guys can see here. And though we are a good amount above that 21 EMA, when you got momentum like this, the train keeps going until the train stops. So what we're looking for this week over the next couple of weeks, guys, is a bit more chop and then eventually a breakout through the highs here for another leg towards the upside. So the whole kind of, foundation of this trade idea is that we're going to consolidate and that we're not going to fill the gap to the downside. Right? We're looking for continuation. If we pull up our 4-hour chart, we got a really good looking 4-hour squeeze right now, as you guys can see. So big time move into earnings. Now we're building up energy, looking for that energy to get released towards the upside. NVIDIA calls at the moment, guys, are pretty damn expensive. So buying calls is pretty straightforward. If you got the capital, you can buy the $800 to $1,000 strikes, right? If you want to go risky, you can go out the money. For those of you guys with a bit of a smaller account, you could look to sell puts underneath the 4-hour squeeze, right? So the whole foundation here is that we're not going to fill the gap to the downside. So if we look at that gap on the daily chart, we're looking for continuation. And the safe bet here, guys, is to place a bet that we're not going to fill the gap and roll over towards 340. So of course, what you could do is a put credit spread down there at 340. Now, if you want to do this on the weeklies, you're not going to get as much premium as you could, say, doing the monthly expirations. But you're still getting 47 cents of credit, which isn't terrible. And you're risking $200, guys, to make 50 on one contract. So that's a 4-to-1 risk-reward ratio. So depending on account size, you could do 1 contract, you could do 5, you could do 10. But a 4-to-1 risk-reward ratio isn't all that bad, to be honest with you. And then think about it, guys. You're shorting the puts down here at 340. We got the 4-hour squeeze. If it fires to the upside, you're making max profit. If it breaks out and fails, you make max profit. Goes sideways, it even rolls over. As long as we close above 340 by Friday, you're going to get yourself a pretty nice return. And of course, if you wanted to go further out to expiration, you're going to get a better risk reward. But I like NVIDIA there, guys, for some potential continuation towards the upside. But as always, you can take advantage of option strategies in many different ways. The safer bet here, if you're not interested in buying calls, is to do a put credit spread right down here at that gap fill level. That way you can still survive even if it falls apart before ultimately going back towards the upside. So that's NVIDIA, guys. And then one we're looking for here for some downside exposure is Restoration Hardware. So this is very straightforward, guys. We pull up the 21 EMA right now. Where are we? All right, so got the 21 EMA right here, and as a rule of thumb, guys, when the stock is kind of, business as usual, just kind of making its typical trend, you're going to run about 2 to 3 ATRs away from that 21 EMA before seeing a reversion to the mean. So at the moment, average true range for RH here is about $12. We'll call it 10 for the sake of conversation. So typically, guys, $20 away from the 21 EMA here at 160 means the stock is a bit extended. You can see at the moment we're closer to $200 per share. So this stock is about 3 ATRs, just about 2.5, 3 average true range moves away from its 21 EMA. So in other words, this is a stock that looks a little bit extended and is very likely, guys, to make some sort of fade, if not all the way back down to the 21, at least a little bit of a sell-off and a chop before making any kind of continuation to the upside. So super simple swing trade idea here. You can go out 30 days till expiration, and you can do a call credit spread shorten these 220 calls. You're getting $1.70 of credit here, and if you do one contract per side, you're risking $3.30 to make $1.70. It's about a 2-to-1 risk reward ratio, guys. So for me, I'm planning about 20, 25 contracts here on this trade, right? And I'll show y'all what 20 would look like. And that's a really solid trade, and as I was telling the group earlier, you start with one contract, guys, and then, 6 months later, a year later, 2 years later, you're doing 10, 15, 20 contracts. This is a high probability, low stress trade that if works, that profit covers all my living expenses for the month of June. So as you get bigger, guys, you're going to be making the money you want. It's a slow process, but once you get there, you're probably going to be pretty damn content. So that's something for you guys to consider. 220 call credit spread, right? You could do one contract with a smaller account. You're getting a hell of a risk reward. And now why are we going to short calls up here at 220? We just discussed that we're pretty far away right now from the 21 EMA, and we should expect some sort of reversion to the mean, just like we had here, sometime soon, especially within the next month. Of course, guys, the stock could continue to explode, but when we're looking for swing trades, we want to, take high probability. And high probability trades are going to be found when you're following a market structure that happens 8 to 9 times out of 10. 8 to 9 times out of 10, guys, the stock is too far away from the 21, you're going to get a reversion to the mean. So we're going to short the calls up here at 220, and we're basically placing a bet saying, hey, even if this thing doesn't return to the 21 over the next 30 days, we don't think it's going to come all the way up here and fill this gap to the upside above 220. Hell of a risk reward. You got plenty of time. And to make these trades easy, guys, once you get filled, don't sit here and stare at this thing. Go set an alert, right? Tell Thinkorswim, hey, let me know if this thing gets to about 215. Right? We'll be $5 or so away from the strike that I sold. Then you can make decisions, guys, about hedging, cutting. But ultimately, you close below 220 come expiration day, you're making a 50% return on your risk. Doesn't get much easier than that. So Restoration Hardware, NVIDIA, Beyond Meat, those are 3 swing trade setups, guys, we're looking at the moment. For me personally, I still got 2 positions here in gold, which are working beautifully. Took gains last week on some Netflix credit spreads. Took gains last week on some Amazon credit spreads. Looking for Amazon to come back to the 21. Right, I took my second entry in gold on the pullback to the 21. So those are things we're looking at here, guys, but mainly NVIDIA, Beyond Meat, and then Restoration Hardware. Those are my 3 favorites at the moment. I'll keep you guys updated. If you haven't already and you enjoy the videos, please subscribe, and I'll catch y'all in the next one.